As many of you know, I'm an employee of Assurion, and Assurion announced a pretty sizable layoff this past week. Globally, it was about 1,000 people. And specifically on my team, we lost several. It was quite shocking. It was painful, and it's pretty emotional. I bring that up because I know we've talked about this in the past about layoffs happening in Nashville, and they are happening here, and it does impact the housing market. But this is a tough week. And so I'd appreciate it if, please be respectful in the comments, both to Assurion, my employer, and to the people that work there. They're phenomenally talented. And it's been tough on everybody. At the same time that this was announced this past week, Ford actually, Bloomberg broke a story where Ford is potentially laying off 8,000 people. Google is pausing hiring for 2 weeks while a lot of the tech earnings next week come in. There's a lot of things happening in the labor market right now, and those things will directly impact the housing market. The Federal Reserve is committed to tightening financial conditions, and tightening is impacting a lot of businesses. I know I did a forecast earlier in the year, and I know I've been saying that I think prices are going down. I still think they'll go down, but I also think that this could be a good time to buy, and I'm going to show you why. The CEO of Redfin actually called out Austin's market and said it was on track if it continued. Oh yeah, Austin, Texas, there it is. Okay, it would be on track to lose 48% this year. He said, now I don't think it will drop that much, but let's look at the median sales price. Look at that. It's dropping. It's been dropping since late April. And here's the thing that I want to show you, and it's actually a big difference between our market and Austin's market, and that is in the active listings. If you go to active listings, this is what I kind of expected to happen in our market. I'm not sure it's going to happen now, and I'll show you why. But look at this skyrocket. It's past 2019 levels, and you can see, even if it slows down now, they're going to have a price correction. That's pretty wild. And at the same time, if you look at their months of supply, just skyrocketing. It's the highest it's been in several years. Be interesting to see what it was like before then. But let's take a look at Nashville's market. Nashville, if we go back to active listings, you can see that we're still very far down below 2020 levels and 2020 and 2019 levels. And see, I expected us to pass 2020 levels, but we're going to have to find a new source of supply. People that were planning on listing are listing. People that thought they were going to list in later this year pulled up because they knew that the market was getting bad. So we need more supply, and it'll be interesting where it comes from. But you can see it doesn't look at all like it's slowing down, but I'm going to show you a chart that tells me that it's at least slowing down in Davidson and Williamson. Okay, so if we look, we got inventory on top and contracts on bottom. Now, one thing I'll say here is that contracts are the denominator. Inventory is the numerator when it comes to months of supply, okay, or inventory. Months of inventory is what they call it, okay? The denominator is now tanking. We're going to see closed volume fall through the floor. And when that happens, we're going to see months of supply go vertical. That's a little bit misleading because the demand is still out there. I'm not convinced that the demand curve has actually shifted left yet, which means that people still want to buy. There's a lot of buyers out there, but they're just sitting on the sidelines. Now, the theory goes that that's why rent rates are going through the roof. And I got to tell you, I did some rent research. I know you guys have asked for that. I did some rent research, and it was, it's crazy. Rent is just absolutely crazy right now. Several of you commented about rent, and I really do want to do a video on it. I'm trying to get my bearings around it because I'm going to be honest. I think everything in the past 2 years is very fake due to what the Fed did. And now they're trying to undo it, which is also fake. And it's just making it very difficult to measure. I'm not sure that incomes are actually real right now. So anyways, all that to say, let's keep going. Sales price. It's still popping up. It's really interesting. Now we're still seeing a significant decline, right? But it's not nearly as low as it was, just what was that? Like on the 15th. So like a week ago, it dropped down to 526 and now it's all the way back up to 540. This is really interesting. Now, one thing I will say about this is even as this is dropping, there's also a ton more concessions that are happening on the seller side. So sellers are not only are you getting your contingencies back of appraisal and inspection, but sellers are also giving up, they're paying closing costs, they're buying down rates, they're doing things to help buyers, and they're doing things to help keep that sales price up. So this is an interesting thing. But the bottom line is that there is a big downward pressure on prices right now. And even though you can't see it just in the price, a lot of concessions are coming back too. Closed volume, it's tanking, guys, just absolutely tanking. And I would expect this to go below that early March number pretty soon. And that, again, will shoot up the months of inventory because it's the denominator. As closed volume drops, you're going to see months of supply, even though inventory is peaking. Let's go back to that inventory. Inventory is peaking here. And the reason I say it's peaking is because here we have like a really record low amount of contracts right now for this year. It's as low as it's been this year. At the same time, we only went up 82 active listings. It's not just slowing down because it's like 172 and 82, but it's slowing down because this number is going down at the same time as this demand was going down. If we were getting the same volume we were getting in early July, late June, then these numbers would be 400 right now. They're not. Now we'll see if it ticks back up, if people start feeling like they're getting stretched on the income and they need to tap that home equity and they do it by selling their house. We'll see if that happens. There's a lot of people. I read the Reddit forum in Nashville about rentals, and there's a lot of people moving out of Nashville because they're just so frustrated with how expensive it is. It's an interesting dynamic. We'll see if that plays out truly in the data, but there's a lot of frustrated people out there. Okay, let's keep going. Sales price, closed volume. Okay, one of you commented that you thought it was price compression, and I agree with you. I think there is price compression happening. It's very hard to see in the data. So I did a box and whisker plot, and I'm not really seeing price compression. Now, you get on Redfin, and you see price compression. I mean, I had 2 listings I was going to show you guys that I thought, wow. I just don't have time, but this is price compression. Or excuse me, this is not price compression. You don't really see it here. You see the median dropping slightly, and then you do see it come down a little bit more here, but it's really hard to tell with this. And to be honest with you, Tableau, it's kind of hard to export the data. I couldn't see it though. I don't really see it. Now, this is the one I'm most excited about because here I'm going to show you Middle Tennessee where the weak spots are. So Middle Tennessee is cracking and we are starting to see price declines. And I did a median sales price, but I also did median price per square foot, sales price per square foot, so that we could make sure that we're actually seeing at least a more comparable size of the home. Now, obviously, quality-wise, you don't know if it's luxury or what, but at least it gets you a little bit closer there. So Dixon, minus 6.2 on the median sales price, but if you look at the price per square foot, it's up 1%. That tells me, and there's only 46 transactions. This tells me that Dixon is probably a little misleading. It's probably not as bad as it looks right now. Ashland City, the same, only the opposite, right? The median sales price is up 6.4%, but the price per square foot is down. Now, here's where it gets the weakness. Davidson County is clearly the weakest county in the Metro Nashville. Okay, we're seeing a median sales price drop 4.2%, price per square foot almost 4%. You've got 536 transactions. There is clearly a downtrend happening in Davidson County. Okay, even in Wilson, you're seeing the same thing. You're seeing that price per square foot drop. You're seeing the median sales price drop. Okay, you get on these outer bands and it actually looks a little stronger. Like even in Springfield and Portland, we're seeing, Robertson County, we're seeing it up 2.5%. We're seeing price per square foot up 3%. Portland, Gallatin, you're seeing median sales price up 3.8%. The price per square foot is staying strong. And you've got plenty of transactions there, which tells you that, it's stronger. It's stronger on the rural parts. Wilson is not. Rutherford is actually a little bit weak, right? That price per square foot is dropping. Even though median sales price is hanging in there, you're getting 3% drop on price per square foot. That tells me there's a little bit of weakness. Okay. And then now we got Maury in Williamson. Williamson is very strong. 1.4% on the price per square foot, and then 7% on median sales price. So Williamson's been very strong. Williamson's been very, very strong. Maury, flat to slightly down. 1.7 up on the median sales price, but again, the price per square foot is dropping a little bit. It's a little bit mixed bag there. But I would say if you had to pick a couple of counties that were the strongest, Williamson is showing a lot of strength. Now, that doesn't surprise me because we're getting ready to start school. people in general, Williamson has a more seasonal market than the others because of how strong the schools are in Williamson County, or at least the reputation. The other one is Sumner. Sumner, to me, is holding its own. It's up on the median sales price, but even the price per square foot is at least on the positive side. The Robertson, same thing. So these northern areas, Robertson, Sumner, and Williamson, to me, are the biggest winners. You get east and southeast of Nashville and Davidson County. That's your weakest areas. And then Maury, Dixon, Cheatham, those are kind of more mixed bags. Like they're kind of flat, to be honest with you. There's just not a ton of data. So, especially with Cheatham and Dixon, not a ton of data there. So I don't have a strong conclusion. Maury, there is, but it seems to be very flat, like a median sales price of 1.7% with a price per square foot that's slightly dropping. That's one that's like just needs more data. I think it seems to be holding its own. It seems very flat to me. If you like this video, click like, subscribe. If it was helpful, I appreciate it. I do spend a ton of time on this, a lot more than you probably realize, because half of the things that I want to say, I pair out. And if you do like the unique views, all this data is RealTracs data, but these are original views. You can't get them at Redfin. They're more fresh. If you like fresh data and you like unique views, click that subscribe button, the alert button, and as soon as I post these every Saturday, you will get a good, fresh, unique look. Thanks a lot.